Welcome back, everyone. Thank you for joining us. Apologies for the late start time on this session. As you can imagine, it's been quite busy upstairs, lots of networking going on, and it's great to see even more people in the room right now. So thank you for joining us today. As you can see, our next guest is Anton Langbroek, Global Vice President Commercial at Bitpanda. And this chat is going to talk about the evolving landscape of digital finance, including cryptocurrencies and decentralized finance. And we're hoping to give some valuable insights into how you can stay ahead in the world of digital banking. So please join me first in welcoming Anton. Anton.
Thank you.
Okay, let's dive straight in then. So how is digital banking transforming the traditional banking industry?
Yeah, well, of course, first of all, we have seen over the last couple of years like newcomers in the market, right, who are trying to disrupt traditional banking. I have, as a banker, I have quite some experience in basically working for the traditional banks with infrastructures, and we all know those issues. So the obvious answer would be that neobanks are disrupting the industry and that they're taking market share and so on, right? But I think that's not fair as well to traditional banks as well. I think it's all about, I'm a big advocate of ecosystems, right? So bringing together fintechs, bringing together traditional banks, and then together basically reshape the whole market as well as the infrastructures of it, right? So I would look at it, banking transitions. We see, I've worked for ING Direct, where we were the first, let's say, digital bank. Now, 20 years later, what we see now is that ING Direct became a traditional bank, and it's now all about the Revoluts, the N26s, and the Monzos. So where are they going to be in 20 years? That's my question.
Well, what's the answer? Where are we going to be in 20 years?
Well, if we do not continue to offer new products and be creative, also by addressing the market with the products people want, instead of forcing products upon the market, as we have done in the past, then we will stay in the same way. So I think traditional banks need to overlook their products. I've talked to a large German institution. They have 192 different mortgage products. My question is why? So reshape your products, reshape your culture, and then based on that, reshape your infrastructure. That would be my answer. And look for people who can do things better than you can. There is no company, no bank in the world that is best in all products. There is no fintech in the world who offers the best service in everything. So go and pick the players in the market who are best at something, right? And if you look at the company that I represent, we're born in the crypto space. We started with a B2C company where we service 4.2 million customers. But then we moved into the white labeling, so we used our infrastructure. We rebuilt our infrastructure to actually serve traditional banks. So we can partner up with them, having a very low entry level for people to get into crypto or different digital assets. And that is now basically allowing us to service over more than 20 million people within 8 months of our existence. So that is then how you combine the strength of traditional banks, fintechs, but also neobanks and fintechs. How do I combine that strength and bringing it to the market where everybody can benefit from it from the same time? Also on transformation, I've been talking about open banking now for probably X number of years, right? But if we go out here on the street, and I know we have a lot of experts here in the room, but if we go out on the street and ask 10 people, what is open banking? 9 of them will probably tell you it's the door how I enter my banking branch, right? So what we need to do together as an industry is being much more on the educating front of explaining it to people. Yesterday I arrived at Heathrow, at the airport, and I was pretty lazy because I was also late moving in from Barcelona. And there I had a conversation with a taxi driver, great guy, and I talked about crypto. And he was like, crypto? Yeah, but I don't understand it. Isn't that the case if we go outside in the street, if we talk about digital assets, that people don't understand what it is, where it comes from? The only thing that they know is, yes, I can make quite some income fast or lose it all. But there is a lot in between, right?
I think you're right there. There's definitely a gap in people's knowledge, certainly the average person in the street. So it's fair to say that crypto gets a mixed press, as you said. They're seen sometimes as potentially too risky, more of a gamble, I suppose. It's what you were saying. You know, there's opportunities to make fast gains there. So what are the advantages and obviously the potential risks associated with crypto in the context of digital banking?
So again, like having worked for banks, for me, cryptocurrency is just another asset class, to be honest. That's how we as a company approach it as well. And what we said is, okay, if we want to treat it like a normal asset class, we need to treat it as well from a regulatory and compliance perspective. So the first thing what we have done as a company is, if we want to go in this market, we want to open up cryptocurrency to a lot of retail customers, business customers, but as well as the large corporates where we're now working on, then we need to be completely regulated. We want to be completely compliant, and we have top-notch security. Those are the three things where we invest most of our money in when it comes to, instead of handing it out to the founders or to people like myself, we are basically investing everything back in our infrastructure to make sure that we build up a trustworthy brand, that we have people who actually trade with us, that they are feeling secure as well. So even if everybody heard about the FTX story, and everybody does then think that everybody who's in the crypto space might be the next FTX. Well, we are basically covering that as well as by protecting the customer assets, right? So even if we would go, God forbid, if we would go out of business, people can be assured that their assets are safe, right? So they would get the payout on their assets that they store with us. And I think that is the main difference. I think that is how we are also still developing our product side of things. But if you compare it with money, right? Just take your own money. We will always have people who are keeping their money in their socks. We will always have them. We will always have the people who are completely in the crypto space. They will always have their little database and walking around it. Well, what if your house burns down? I am not familiar with how to have my own wallets and do a download and whatever. I also don't want to be bothered. I want to trade against a partner as a retail customer where I know that my assets are secure, where I know that if something goes wrong, I still get my payout up to X, right? And I want to be able to access that service quite quickly. And I'd rather do that via the bank I already bank with than having to have downloading another app and then need to find out all the terms and conditions and whatever. So I'm a convenient person. And let's be honest, 90% of the people are. We want convenience, we want access, and we want to have good service, right? So then find a partner who can do that. Do banks do best at that? Not yet. Are neobanks best at that? Not that. I have a neobank and I had an issue last time. The only thing I can solve that issue is via chat. Is that the best way forward? No. But is their service much better than the traditional bank I also have a bank account with? No, because my customer experience is like 10 times better with a neobank than with my traditional bank. So try to find the way of how you wish to deal with crypto. Reduce the risk if you're investing. And of course, we all know that education here again is very much important. If you get into crypto trading, I think people, the banks or people like us, have the obligation to educate people about the risks, the benefits, but also, okay, what are you trading? So we are actually trading or basically building profiles which fit to the customer profiles of the bank, right? So we're not offering something which we don't believe in as well. So we're not just listing additional cryptos to have more. Currently we have 300 cryptos listed, 2,500 digital assets in total, but we're not just picking up on everything. So we're doing firm due diligence. You cannot buy what we call in German, I'm Dutch by the way, but work for an Austrian company, Schrott tokens. It's like, I'm not sure if I should use the word, but it's a crap token,
okay.
Right? So we are also very careful on protecting the capital of our customers and also the reputation of the banks we work with, because that is the biggest risk for the banks is all about reputation.
How do you decide which are the crap tokens?
But
Sorry, I couldn't resist that one.
yeah, no, fair point. So we have, from that perspective, we are not really a fintech, but even more going towards a traditional bank, right? So we do very much, we have risk committees who are deciding it, who is involved in that, where's the funds coming from. So we go through the whole thing. Then on the market capitalization needs to have some X before we even think about entering it. Then also we're looking at the trade volumes, et cetera, et cetera. So there is like, I'm not the expert in this on that, but I think we have like 250 factors we factor in on before we make a decision on listing something.
Okay, so bearing that in mind, you're talking a lot there about due diligence and standards and self-regulation almost. What steps should individuals and businesses take to ensure the security of their own digital banking transactions?
Yeah, so let's start with private persons. I think I touched a little bit on it, right? So there was a comparison with the sock of money and having your little storage with you all the time. So if I'm a person, I want to go somewhere where I know that the risk of losing my assets is small. I want to know that they are using all kinds of biometrics, fingerprinting to get access to it. So I know that it's not just somebody holding my telephone in front of me and they can have access to my assets. I think that is an important thing. So you can do, as a person, you can do a lot there. But I see the biggest responsibility actually on the people who are serving you, right? So if you're working with a broker or if you're working with a bank, I think their responsibility is to keep you secure is even bigger and much more important than you as a person, right? Because you as a person, you can only use the technology offered to you. And as a bank, you can actually implement the technology that's out there, right? And you have much more investment power in doing that as well. On businesses, I would say, if you have digital assets, first of all, you need to find a custodian, right? There are a lot of custodians out there right now who are doing a fantastic job. I would say, as a business, and I'm now talking partly against my business model, but I would keep all the digital assets in my own custody if I was a business or a bank, and make sure that the security around that is extremely tight. So don't have unlimited access to that.
Okay. What innovative features or technologies are shaping the future of digital banking, and how are they enhancing the customer experience?
Our talk of the town, when I started working, was always customer experience, right? Apps and all that. I think that's still part of talk of the town, because we now have new technology in place, and of course everybody's talking about AI. I think AI will help banks improving the service, or financial institutions or companies like ourselves. But I'm still also a little bit worried about the side effect of that. So, because with AI, it's so broad, you can do so many things. I'm not too worried about AI as in the right hands, but I'm also seeing AI as a risk. But AI will definitely be the thing to go for. But also, if you look at infrastructures, we still see a lot of people using legacy infrastructure, right? And I think there we need to have a big breakdown, and I see that breakdown is now starting, also with the large traditionals. You can't have an organization, if you change something on the infrastructure, that somewhere in Asia you have an issue 6 weeks later, right? Or 8 months later. So in crypto, I think if you look at who's offering staking, who's offering indices, who's offering derivatives based with crypto as underlying, etc., I think that will continue to go on, as we are, as an industry, always looking to improve the way people can invest. And it's absolutely about how can I make it a little step to start investing into digital assets. And now I think it's still quite of a hurdle for people to jump over to get into digital assets. And it's not only for people like you and me, it's also for companies. Where do I start? I think my answer would be look at the custody itself, if I'm a financial institution, and then build up on that. But define the use cases that fit your public. That's the most important thing. And then use all the technology that is out there. I don't think we will have any other revolution, because we say AI is a revolution, right? My wife will tell you very much different, because she works in that space, and she said, a lot of the things now is like on the billboards and everybody is using this terminology. She said, we were doing that 15 years ago. But it was just not hip. It was just not used enough, right? And to be able to use AI, I think it's all about the data centralization as well, right? So where do you get your data from? How is the access? And what do you want to achieve with it? So create first, what do you want to achieve? Then backwards engineer, and what do I need? Because people are always starting to invest and investigate what do I need instead of thinking about the goal. So that's one of our philosophies within Bitpanda as well. First, identify the goal and then backwards engineer. Using regulatory, what can we do within the regulatory? What can we do in compliance? What can we do on the capital side? And what can we do on the risk-taking appetite, right? And then build out a new product before we do that.
Okay, a couple of things to pick up on there. I think we managed to get 15 minutes into a session without mentioning AI, which was great. But you did mention that AI
You asked for it.
I did. You did mention that AI is a danger or a threat or a risk.
Yeah.
So what clear and present danger does AI provide?
Well, it's on, the obvious thing is fraud, right? So by using AI, I can actually, if I'm quite sophisticated, and we all know that everybody who's trying to attack financial institutions, there are a lot of very smart, sophisticated people out there who are using, unfortunately, their talents in the wrong way by getting into your money, right? So if you talk about voice, if you talk about what they can do with your personal data, which is flying all over the place, even us sitting here today might already give something away, right? So I see that as the biggest threat, that on the fraud, we are behind of the technology that hackers and other people are using, who are using AI to the best of their advantage, because there's no rules for them. We are using rules, right? So we're not doing everything with customer data, but they can. And I think that is a big threat. I mean, you know, and I don't want to get into politics, but you see now AI used in certain conflicts all around the world for a very propaganda, whatever, right? And that's what hackers will use to get to your wallet or to get to your bank account or to get to your spouse or your partner or whoever, right? That for me is a big threat, and I'm not sure how to fight it on the long run.
The other thing that you mentioned earlier on in this conversation, you were talking about the fact that, for instance, that one company had 172 or 192 mortgage solutions.
Yeah.
And obviously the customer or the general public, the end user, they can only take what's offered to them. So does there need to be more emphasis placed on the consumer for them to say, well, this is what I want and this is how I want it to work?
Yes, yeah. I mean, I had multiple... The worst conversation I ever had was with a banker, and that was in Amsterdam. Yeah. And he was telling me, you know what, the public should actually be grateful that I'm giving them a consumer loan. And I was like, what? I mean, how can you tell me that in 2020? So it was not that far ago, not that long time ago. So that is exactly what banks, from my perspective, some of them, not all of them, not that I'm walking outside and some people are trying to... We have to be careful. But we need to listen more to what the public needs, actually. And I'm now going again say something unpopular. Why do you have 102 different mortgages products, right? The people in the branch were only selling those where they got the best commission on, and not which would fit the best to you as a consumer, right? So I also think their banks can do a massive improvement. And yes, we're all in the business, of course, at the end of the day to make revenue. Let's be honest about that one as well. But I think reducing the number, it's the same thing if you go to a restaurant, and I feel very much at home there because I come from a family who own restaurants, right? If I go to a restaurant and I open up the menu and there are 192 products, I know none of them is fresh. If I go to a restaurant where they have 3 main courses, 3 starters, and 3 desserts, I at least know that the quality of the ingredients, normally, is fresh. because you can control it. It's the same for a bank. If you have 192 mortgage projects, how are you going to maintain that? You don't even know on which one you're still making revenue or not, which is the margins. I've had this discussion with banks, right? Just cut off. There is too much of financial product offering. And so it's the same for crypto. So if we talk about, we go out with banks and talk about a partnership and releasing crypto to their end customer, we actually make an analysis of their portfolio and then look which coins fit the best to their offering. It doesn't make sense to just go out and say, okay, dear N26, which is one of our customers, right? You're servicing 6 million end customers. Let's just throw 300 coins at them and see what happens. No, of course not. That doesn't make sense at all. So we're slicing and dicing, and we are supporting those banks as well as in rolling out those new features because you want to keep your public entertained, right? You want to do new releases. You want to show innovation. You want to see product change as well. But just throwing everything at it at once, I would be overwhelmed. I also would lose interest, right? What to pick from. Sometimes you just need help. That's why my wife is buying the cars in the family, because the whole configuration stuff is just, I can't handle that, right?
So too much choice?
Yes.
Okay. Does anyone else feel, when specifically relating to crypto, that there's too much choice, the market's too diluted? There's not many hands going up.
No one. So maybe we should then release a couple of other coins. I would be very interested to have a discussion maybe with some of you why you think that's not the case, because I would be very interested in that.
Okay, we'll have to take that one offline, but please do grab Anton. Don't attack him with money in a sock, but do approach him with some sensible questions regarding crypto and everything we've talked about today. Thank you very much, Anton.
No, thank you. Thank you, everybody.